markets in the past, the flow always goes to gold first and then bleeds into silver. I think we'll see that happen here. This is a very unusual time. And, you know, the little boy who cried wolf in me says the same thing over and over, but it's happening in real time. And you can see it beginning to unfold. And it's the game that's been played on the Western exchanges is being slowly exposed. Slowly, we're seeing countries make a drive to accumulate, to stand for delivery. We saw the largest delivery in the history of the COMEX and the May contract for silver. Today, the close, or yesterday, June 3rd close in Shanghai, had silver priced at 36.36 an ounce. The arbitrage continues. We've talked at length about the level of effort that's being put in place by countries like China, who is the second largest. David Morgan tells me he thinks they're the first largest. That's what they told him when he visited China. But the first or second largest importer of silver, or producer of silver in the world, rather, going all around the world and buying up concentrate and doré and sending it back and refining it themselves. We've talked about all of that. To me, what's really interesting are the level of deliveries that we're seeing on COMEX, for sure. That's something that's very, very, very unusual, and it's not something that we would typically ever see. It's happening in a very, very, very substantial way, for sure. You know, everyone's been talking about gold, but ignoring the amount of silver that has been delivered, including the massive delivery here in May. So yeah, I mean, I think that silver is one of these deals where you can see that the chess pieces are put on the board. And when we talk about a cup and handle formation, it mimics gold's cup and handle formation almost perfectly, with the exception of gold has broken through the base or the top of the cup and has gone up to the handle. And what we see with silver, it's right at the base, right at the tip of the cup, ready to break through. If it gets through 35, in essence, it's broken through to the handle part. And this is a long 14, 15, 16 year base building. That makes the move that much, potentially that much stronger. You can feel it. And the ability of the West to, silly as it may seem, suppress the price of silver nakedly, if that's a word, or the naked suppression, is very dangerous right now when we see these deliveries and the amount of standing delivery requests, not just on COMEX, but we're seeing it the same way on the Shanghai Exchange. We're seeing it on the London Metals Exchange. When we see stuff come off Shanghai, it's that they're promoting and prompting their citizens through state-sponsored gold and silver acquisition programs to accumulate metal. In fact, just as a side note, we just saw that China has lifted quotas and increased them for the banks. The banks, who are traditionally the ones importing the metal into the country, they've now increased those quotas, and we're seeing large amounts of importing coming into China. Huge amounts of gold and silver delivered into China. Here we go. Well, for gold, they bought 30 tons of gold in March, five times more than they officially reported, according to Goldman Sachs. This follows the purchase of 50 tons of gold in February, 10 times more than they reported, according to Goldman Sachs, and 127.5 tons in April. Well, we know that they're importing gold. The rumor is, according to Eric Young, King Kong on X, that they're buying up every ounce of silver that's not nailed down. And that's one of the reasons they're going to lengths to buy doré and concentrate, which disintermediates the market, which makes it impossible for us to say just how much silver they're really buying. But ask yourself, if a $33, $34 price was real in terms of its value, why would they be going to such great lengths? Eric says they're buying up everything they can, playing the long game. Hold tight, all you silver stackers. We will have our day, is more or less what Eric is saying. And I agree with that. So silver is finally starting, I think, to get noticed, and even noticed by the central banks and the big traders, it appears. So, you know, we've been waiting a long time for it, whether it be the technical formation, the amount of deliveries, or the central bank purchasing. All three things are at the highest level, point to silver finally starting perhaps to get that big push above 35 into the 40s. And from there, it's really, there's very little of any resistance above that, potentially off to the races. And you know, it's crazy with gold at 33.80. the 200-year average, roughly of even 45 to 1, would put silver conservatively at $75 an ounce, and that would just be the average price of literally last 150, 200 years. It's coming out of the ground at 6 to 1, which would put it at near $400 an ounce. So I'm not saying we're going to be there tomorrow, but what I am saying is, from an asymmetrical standpoint, not only have all of us realized what a value silver is, no matter how difficult it is to hang on to that conviction in the light of counterintuitive market behavior, it appears to me that the most sophisticated and well-informed traders in the world are now onto that same thread. And so I would expect, based upon the positioning, the deliveries, right now the 36.36 closing price yesterday in Shanghai, the arbitrage, everything is pointing towards an escalating silver price into the fall. We already know how the world feels about accumulating gold in this environment. I think silver is not too far behind it. And that's the pattern it's followed for all of time. There's a 90% correlation in their movement, but not always with perfect symmetry. And to Rick's point, silver goes first, silver catches on. And it appears that we're right at that level, right at the time when a lot of the retail investors have kind of lost faith in silver. And I understand that. And quite frankly, that's a compliment, if you will, to the manipulators who have done a very good job, not only through volatility, but through counterintuitive price action. And by holding it down in the face of gold, accentuating, there's been a lot of people who are just exasperated with silver. And that is another contrarian indicator. When they've held for this long, they see things brewing and growing and accentuating, and just through exasperation and just being exhausted by trying to stay positive and focused, they give up. So yeah, I honestly am quite bullish on silver, maybe more so than I've been in a while, just looking at what's hiding very, very near the surface, but yet just a little bit under the surface, so it's not getting much in the way of attention. I haven't seen today's number, but it closed yesterday, June 3rd, at 36.36, up $2.70 or 2.75%, rather. I'm sorry. And so yes, this is what they do to entice the sophisticated traders who have the ability to buy in the West and deliver in China. It'll never come back. But if you're dealing in 5,000 lot increments and you're dealing in 100,000 ounces or a couple 100,000 ounces, if you're making $2-3 an ounce premium, that's a good trade. Well, it's great for your short-term trade, but in essence, you're selling out the future of the country. And that's kind of what Eric's point was, is that the Chinese understand this game. They're playing the slow, long game and have been delivering. And that's why they're buying up all the Doré and the concentrate, because it masks their real endeavor, their real aspiration. And his feeling is that, and this guy lives in Hong Kong, he's spot on. And he says, look, they're playing the long game to secure enough silver, which is strategic in nature, in my mind, not industrial, as we're led to believe. They're securing the future in what is really highly dependent on silver in electronics, in batteries, in military, in so many, not to mention monetary. Now, I don't know that we'll ever go back to a bimetallic system where gold and silver back the monetary system. But I do think that the realization that silver is very important, that it tracks gold regardless of its monetary status, and has since the beginning of time, those things are still in place today. So it's just beginning to be, I think, realized as something very, very important. One of the things that we've seen with gold and silver going higher is that the non-commercial interests, that would be the hedge funds in particular, have really not participated too much. And it just seems as though, looking at their participation, that it's starting to move up. So you have the central banks that have been buying, and then the non-commercial players that really haven't been too deep into gold and silver. That looks to be changing on COMEX as well. Everything is pointing towards an accentuated price into the fall. So I would say that, yesterday's move was spectacular, and we'll see if it has follow through to continue going. It was pretty much flat today, but it's holding. And one of the things that I've noticed with gold, and we'll see how it plays out with silver, is that anytime it gets near the 200-day moving average, there is a slew of buyers who come in and support it. When you look at gold from the context of the way that I used to view it, then again, if 3,500 was the benchmark that we finally touched and then it got slammed, it would be slammed and wouldn't come back for the next decade. It would just literally be obliterated. We'd be at 2,500 an ounce right now. If as